This is a pivotal moment in the company's history, and we are very excited about it. In terms of trust for the investors, really it's about performance in our view, and it starts with generating profitability that's sustainable through cycles and free cash flow. We know the industry has shifted, and we know there's this tremendous emphasis on returns, and that's what we are focused on. We ended 2020 with positive free cash flow. We've had 5 quarters of double-digit EBITDA margins. A very good first quarter in that regard as well. So that's really what we are focused on.
And I'll say this, Gresh, it's not just been Weatherford. By the way, there have been hundreds of bankruptcies, small and large, in oil and gas. I don't need to tell you that. The last few years, the industry in general, without picking on any companies, has been pretty lousy stewards of capital. I mean, literally throwing money into holes in the ground in some cases, and I'm only being semi-facetious. Has the industry, Gresh, has Weatherford, has the industry figured stuff out to be better protectors of investor capital?
Yeah, Brian, I think the industry has fundamentally changed, and we see that reflected in the capital plans of our customers. We see that in all of our peers. We see that within the company itself. The industry typically has had a boom and bust cycle. As you know, it's a very cyclical industry. And typically at every downturn, there has been in the past a view that things will come back. And so you plan for that and you invest a lot of capital. And as we've seen over the past few years, that hasn't always been the same case. What we're seeing through this cycle is very different behavior from both our customers as well as our peer group within the industry. There's a tremendous emphasis on not spending that capital unless we really know the projects are there, unless we really know the returns are going to come through. So a lot more fiscal discipline. And I think that is something that is going to endure through this cycle. And so, there's clearly more work to be done. We've seen a lot more consolidation in the E&P space. We've seen a little bit of that happening in the services space. But as that takes a little bit more hold, things tend to move on. But I think the nature of discipline, the fundamental lessons have been learned, and there will be a difference in this cycle.
Yeah, and where are we, Gresh? Because to your point, oil prices go up, we drill more holes, we produce more oil, oil prices crash, companies go out of business, rinse, repeat, and start over. We are seeing this gap between oil prices and I think there's a lot of non-believers still. Where do we stand right now in the Permian, in the cycle of new capital spending? I have noticed rig counts have not gone up that much.
You're right. And again, we look at that as actually a sign of the way the industry is now operating. Rig counts went up significantly compared to where they were last year, coming out of the second quarter or the first half of last year. Things have started to move upward, but they've started to stabilize a little bit. And we think they'll, in North America, remain around that level. And so our focus within the company is to really make sure that our business operations are profitable at this level of activity. We are not really counting on activity increases, to get the business in a better shape. And as we look at the international side of the business, where we have a tremendously strong presence, over 3/4 of our revenue comes from outside of the United States. Again, we see a lot of pent-up demand. We see things improving steadily over the second half and going into next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.